Good morning, guys. How are we all doing? I am Dan from Trading with Dan, and this is our Bitcoin morning update. As we all know, we have new Bitcoin all-time highs, as we all expected here. We all knew this was going to happen going into the end of the year. Also today, you might notice I'm looking a little bit fresher than usual. Normally I get up, do my research, do my video, and then I go and get a shower and get ready. But I've had a shower and got ready first. So there you go, guys. Just for the new all-time high Bitcoin videos. So yeah, hope you guys are all well. I'm sure we are all in high spirits this morning. We're all in high spirits. We all know the trend is your friend. We all know when Bitcoin gets these moves, it ends up going to some ridiculously astronomical price that like even us involved in crypto could never predicted or never thought of beforehand. Just cast your minds back to a short period of time ago when we were approaching that old $20,000 high. Who was saying, right, well, we're going to go straight to 60,000, guys, 3x from 20k. Nobody was really saying that, but that is nonetheless what the market went and did. So just put things into a bit of a perspective for you. So yeah, let's go straight over to said Bitcoin charts. But yeah, you can see we are fast approaching that all important $69,000 level. As you can see, this run has been pretty unabated from 40,000. So as we know, at some point we do have to expect a savage pullback, but we can also expect that savage pullback to be as savagely brought up, be it on like a daily or weekly basis. It will potentially not play out over one day, but ultimately we are looking for a pullback at some point. So at the end of the day, it's just a case of average on side and tighten your stops for anybody longing, leverage longing, or anyone long crypto at the moment. But yeah, there's not much else I can say. We're in relative price discovery. We are looking to put in a new high. When we put in a new high, we'll get a pullback. We'll get like a rally back up towards that high. We'll fail. We'll come back down. We'll take out that higher low, and then we'll play some sideways to down. I mean, that's basically how charts work. So yeah, there we go. Also, if you want to go and cast our eyes over to the Ethereum Satoshi pairing as well, as you know, this is one of the favorites of mine. You can see we are approaching this important horizontal, which obviously these highs, which did govern these highs here. It wasn't drawn from these highs. We've had it drawn obviously for a while. But more importantly, we've got this high here to take out also, and then this area, and then yeah, maybe we will see some actual decent moves in this to the upside, which we all know is coming. We all know this chart is going to these higher targets of around 1.11, 1.14 potentially as well. We haven't got the drawing on. Oh yeah, 0.15 even, 0.11. We all know that's where we're going. It's just a case of the timing. It's just a case of the timing. So we all know the destination. It is just a case of the direction and the velocity that we get there. So yeah, obviously looking constructive here. It is set at a point where Bitcoin can clearly have another little break to the upside. We can get slammed back down again, as we have been doing for a prolonged period now. But ultimately, at some point, it's going to turn up, because the attention is gonna turn to the most used and the most useful crypto in the space. And there are a lot of people in this space that are massive ether heads, Ethereum promoters, Ethereum bulls, that as people buy their Bitcoin, they start to stick their head into the rabbit hole. They then start to see obviously the blindingly obvious benefits of Ethereum potentially over Bitcoin, just for even if it's for trade, even some price appreciation, even if it's just for a higher beta trade. That is where they will cast their eyes. So yeah, looking good. Obviously USD pairing also finally looking better. I mean, it's just so nice to see horizontals just just work how they work, because this is why we have them, why I have them, and why I use them. So obviously it is a self-reinforcing strategy, so yeah, it's good to see them respected and work out. But yeah, as you can see, nice breakup. This was our projected target. I mean, we're not far off it, we're not far off all-time highs. Like I said, we all know where this is going. The Ethereum Satoshi pairing ultimately is going to rally. Bitcoin is ultimately going to rally from where it is now, which then, this being a derivative of said two pairings, is going to clearly rally to 8k EOY. So we still got plenty of time for that. This is crypto. A 2x less than a 2x is nothing for an altcoin or even Bitcoin. Yeah, let's look at the Bitcoin dominance. Obviously easing off a little bit here into support. Don't forget, this is the whole wider trash coin market. As you guys know, I specifically concentrate on Ethereum. This includes like everything, every trash coin. I mean, XRP, everything's in there. Cardano, dare I say it, Hex. No, I'm just messing with Hex. Hex is obviously making people a lot of money, and also I don't think it has accurate market cap calculations to even be included in this. So I don't even know what happens with that coin, but yeah, so obviously this is pulling back, but still clearly bullish. Got some work to do if it wants to break down, but yeah, like I said, don't particularly look in this. All the fun and all the action for Finance 1.0, those people that are still left in Finance 1.0, that aren't just have crypto, just basically just concentrating on their side chick now, which is obviously crypto. Their main chick is on the way out. Crypto, obviously, wife changing gains, and so market trading gains, whatever markets you trade, you're going to start trading other things. But yeah, just look at the S&P. We do have to expect a pullback in the S&P also, and a rally in the VIX. S&P is overbought, VIX is oversold. Nasdaq VIX is also oversold, so we are going to expect a pullback, but I mean, we've got this nice horizontal level to pull back into and bounce off. This market has now officially trapped a lot of bears, and it has also trapped, in inverted commas, a lot of asset managers who are not long this market and are going to have to increasingly get long into year end. So we are looking at basically a squeeze up in this. I mean, nothing is certain in trading, but that is a high conviction trade for myself. This is pretty obviously going to squeeze the bears, and it is also going to squeeze. Not squeeze, because they're not in a position. Not being in a position is a position where you're missing out on gains if the market goes up. So yeah, there's going to be a squeeze up in this. Also, in the short term, we haven't really backtested this support, and like I said, I expect a pullback, and I expect it to be shallow, because just because of those market dynamics. The DXY easing off some more as well, looking increasingly like this is going to be the highs, as I was expecting. I mean, just the predictions or statistics and probabilities, but just in my mind, this was going to be where we ended. Interesting dynamics here, which, I mean, without getting into the weeds, the 10-year obviously is rallying, but without getting too much into the weeds, this is just a snapshot of the yield curve. The yield curve, I mean, if you trade the yield curve, you often look at the 2s, 10s, and the 30s, well, actually you don't. That's just if you're kind of looking at the overall picture, 2, 10s, and 30s. If you trade the yield curve, you literally look at like June set, Jan. You look at all basically the 4 quarter months in the yield curve, and because that literally is that's what I used to do, trade the yield curve, trade bonds. But yeah, my point is that yes, this is rallying. This is only the 10-year. The 30-year, basically the curve is flattening. So the hawkishness that is being priced out of the front end of the curve is getting priced into the longer end of the curve, the 10-year and the 30-year. So there is flattening, which is basically indicating that the tightening is gonna happen sooner, and that is not the worst thing for markets, realistically, as long as they can accept it, as long as they can take it. So yeah, whilst this is going up, the curve is actually flattening, and also this is an actual. I've talked about a mini reflation, and when I say mini reflation, I'm only calling it mini reflation in context of the absolute epic reflation we had since those March dump lows. I'm only calling it a mini reflation relative to that because it's not going to be a mini. It's going to be we are having a proper reflation trade here. Basically, bond yields up and the dollar down is fully indicative of a reflation trade, which is obviously good for risk assets. I mean, if you just think about it, the dollar down is obviously good for risk assets, and also bond yields rallying indicates that people are selling their bonds, their less riskier assets, the less riskier positions, and then obviously chasing gains in higher risk assets. So that is literally an inflation trade. That is indicative of basically what we got to expect going into Q4. So yeah, everything looking good. I mean, if you look at Nascoin, you can see also I mean, without getting into the weeds again, Nascoin is performing particularly relatively well compared to other stock markets at this present time, and that is somewhat contradictory into the face of high bond yields, because high bond yields are not good for growth stocks. But like I said, we are it's just a snapshot. The yield curve is flattening. The 30 year is obviously not not appreciating the same value. The rates are not appreciating the same velocity as they are in the 10-year. So that is good going forward for growth stocks, which is why Nasdaq is performing pretty well here in the face of bond yields, but also in a reflation trade. Everything does do well as well. So yeah, obviously in this reflation with bond yields rising, it is more of a wider bag of equities that are going to do well. So it's not necessarily specifically commodities that are going to rally from literally like negative oil prices onwards and upwards. It is like I said, it's going to be a more of a wider, broader based thing without being necessarily specific to any particular sectors. So yeah, just year-end markups in a truly fraudulent fashion are gonna be the order of the day. But yeah, like I said, we gotta expect a pullback. Yeah, I mean the dollar is I believe on a downward trajectory to take out these levels. We have obviously got serious problems going into mid to late Q1 next year, when obviously the Fed purchasing will have to taper. It has to taper in the face of inflation. I mean, inflation is running high. If you actually look at median inflation for last month, so if you basically X out the fat tails, then it is running at its highest level since the 90s. And that obviously means that tightening has to have to come from the Fed. But we've obviously got the money that's parked in overnight repo, which when Yellen has to start selling her bonds into the actual open market, that money in repo is looking for a home. It's only in overnight repo because it can't get a home elsewhere. And then also there's the Treasury General account that has become such a meme in Finance 1.0, which can soak up some of that selling. But obviously that is going to come to an end. That checking account will reach its limit, and then all havoc will start to happen in financial markets once actually Janet Yellen is literally taking liquidity out of the market, because markets at this present Ponzi moment are all liquidity driven, and that ultimately will be a negative liquidity for the market. It basically be a drawdown on liquidity, and there has to be a drawdown in asset prices, and then we get to play the whole game again. We'll have a taper tantrum, and then we'll have a recession probably. In fact, there are even glimpses of inversions in the yield curve, which always predict recessions. All recessions are predicted by firstly inversions of the yield curve. Not all inversions result in recessions, but all recessions are preceded by inversions in the yield curve. So interesting things are happening. We are sorry, I still got my cold. we are at a very interesting time, but like I said, the destination ultimately is irrelevant. It is the journey and it is the direction and the velocity that we take in said directions that is important for anybody that is trading the time frames we do. Even as you guys know, I look at like 4 hour, 12 hour daily time frames. Even those time frames, we still need to look at the path the market is going to take, and the ultimate direction is just going to be it's just crystal ball predictions. It's just like great. You can have those predictions. You may or may not be right. Who cares? It's better to be wrong and make money than to be right and not make money, or right and lose money. So yeah, there you go. So yeah, that is pretty much it for this morning. Oh, actually, we'll look at stochastics because I just want to see that monthly ultimately turn up. But yeah, 4 hour is turning down. Well, it has turned down, but potentially going to turn up from a pretty high level. 10 hour is clearly going to be jacked up to the ceiling when it decides to show us. Yeah, all the way up here, but turning down because obviously it is so jacked. 12 hour still moving up and pointing up. Minimal room to run. Daily still holding up there in quite a funny fashion, just literally just trading sideways at a high that it cannot budge from. 2 day looking to potentially turn down, skip to 5 days. So a 3 day getting very elevated here as well. 5 day got still got juice in the tank of the 5 day. Don't forget a 5 day is a longer term time frame. Weekly pointing up, got room to run. Bi-weekly clearly got all the room to run. This has got all the room to run to 100k BTC, and then monthly, which ultimately will turn up, I believe, and then continue upwards. So yeah, I mean, like I said, I mean, it's pretty obvious with that. You just got to look at this chart and know, okay, at some point we're going to top out and pull back. It's that simple. That's just how charts move. I mean, if we look at the previous move, we had a nice move up and then we pull back and then continue on upwards. So I'm potentially expecting something somewhat similar to this. Maybe it won't be as protracted because I believe we are going to start if we get driven by traditional markets and the dollar, I think it's not going to be as prolonged. I think there was a lot more indecision here in markets with deciding whether we're going to reflate into year end, which was never really any decision on my part. But then I just have high conviction views, which is just part of just basically risk taking, isn't it? You just basically believe what you believe, and that's part of being a good trader. There actually were studies, I remember reading studies from Oxford University with the reason why men are better traders than women is because they have more conviction with their ideas, because they literally just have their testosterone, which tells them that they're just right. Basically, their arrogance and ultimately sticking with an idea and sticking through with it, and not sort of flip flopping about and not being high conviction with your views is ultimately what can make you not be a good trader. Because if you just break it down to its bare bones, with trading you run your profits and cut your losses. So if we ignore the cut the losses part, but like the run your profits, if you are high conviction, you basically are going to hold that trade longer and then potentially buy more and more on average on side. And even if you take losses, if you are averaging on side with high conviction trades, which just on the whole, on the balance of things, men's levels of testosterone just make it easier for them to do. They are therefore better traders, and that they are the dynamics. There is no sexism or anything there. There is a proper study on it. Those are basically the reasons that identify why there are differences between men and women, guys. I hate to break it to you, there are differences. So just don't believe what any of those lefty crazy socialists will tell you. There are clearly differences. So yeah, there you go. So wow, that is a bit of a rant. So thank you for listening, guys. This is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.